What is quantitative easing and quantitative tightening, and how does it affect mortgage rates? Quantitative easing is basically the process where central banks create money supply, basically print money, and they use that money to buy bonds, the government bonds. And in doing so, they increase the demand for bonds and decrease the yields on bonds. And this leads to lower bond rates and lower borrowing costs, basically, for the economy. This increases economic activity and is inflationary long term. QE has been going on for several years, basically since the great financial crisis, and has really ramped up during COVID when rates got really low. Quantitative tightening is just basically the opposite of that, where the central banks end up selling bonds, increasing the supply of them, and increasing yields. This, slows down the economy and is deflationary. The central banks have been doing QT, quantitative tightening, basically for the last year, while they've been trying to fight inflation with higher interest rates. But in the last month or so, while the US has had their banking crisis, they've provided liquidity again and sort of offset a lot of the quantitative tightening they've done over the last year. So a lot of people don't like this because they find that it's kind of market manipulation and long term it's just inflationary for everyone. But I think it's pretty clear that central banks find this as a tool and they'll be using it during our next economic downturn. So if you have any questions on this or you just want to talk interest rates, feel free to reach out anytime.